Welcome everyone, and on behalf of FrontierView, thank you for joining our webinar series. On today's webcast, we will be diving into the outlook for developed Asia Pacific in 2021. Over the course of the next 60 minutes, we will be taking a deep dive into the factors driving the economic trajectory of Japan, Australia, and South Korea in 2021. We'll highlight some risks for companies to watch out for, as well as areas of business opportunity. My name is Althea Han, and I'm a Client Services Manager at FrontierView. I'm excited to be moderating this timely discussion this morning. I'm also delighted to be joined by Boyang Xue, FrontierView's Asia Analyst for Northeast Asia, and Kinnari Ganani, FrontierView's Analyst for South Asia and Australia. We would like this to be an interactive discussion, so please be sure to click on the Q&A box on the right-hand side of your screen and send your questions to FrontierView webinars. We will work to get as many questions included in today's discussion as possible. As a reminder, if you are a client, you can access all of our Asia Pacific market intelligence, research, and data on your FrontierView desktop and mobile applications simply by logging on. If you are not a client, for registered attendees of this webinar, we are offering complimentary trial access to FrontierView. To take advantage of this offer, please request a trial in the comment box or visit our website, www.frontierview.com, and click the Request Trial button. Before we get started, we realize that some of you may be new to FrontierView, so I'd like to take a minute to provide you with a quick overview of our firm and how we support multinational executives. FrontierView is a premier global market intelligence and advisory firm. Our primary focus is on serving the market intelligence needs of global business professionals at multinational corporations by informing and powering their market monitoring, strategic planning, and international growth priorities. From the beginning, we built FrontierView to be different in three primary ways. First, our product and service model has been purpose-built to serve a global business audience. In every aspect of our work, we strive to separate signal from noise and answer the so what, now what questions that are unique to the international business professional. The second differentiator is our model, which we call Strategic Intelligence as a Service. FrontierView is the only market intelligence solution that bundles together information resources, analyst advisory access, and a senior executive network into one affordable subscription. Finally, we are especially proud of our world-class technology, which powers the FrontierView desktop and mobile application and has been built with the sole purpose of informing our clients' workflows and decision processes. We are incredibly proud of our client base, which today includes a community of over 4,000 across 240 companies and is growing, and some of which you see here. Again, if you are not a client and are interested in receiving trial access to our FrontierView program, please visit our website and click the Request Trial button. Having briefly introduced our company, I'd like to take a moment to introduce our presenters for today. On the line for today's webinar, we have our analyst for Northeast Asia, Boyang Xue, and analyst for South Asia and Australia, Kinnari Ganani. Boyang and Kinnari support senior executives on key initiatives, including strategic planning, resource allocation, and risk management. For the South Asia, Northeast Asia, and Australia portfolios, with that, I'll hand things over to Kinnari to get us started.
Thanks so much, Althea. So our webinar today will consist of a 50-minute presentation followed by some Q&A. Now, to be specific, we will begin our presentation by talking about some baseline assumptions as well as expectations of the big topic of all our lives for the last 18 months or so, which is the COVID-19 pandemic. And then we'll take a pan-regional view into what economic recovery across the Asia-Pacific region looks like. Boyang will then take us through a deep dive outlook for Japan as the country unfortunately deals with a pretty volatile COVID-19 situation. We'll then move on to myself, where I'll be taking you through our Australia view, and we'll be talking about the opportunity that's presented by the market's pretty strong rebound after the pandemic and some potential pitfalls that may lie ahead. Finally, Boyang will take us through his view for South Korea. And then to wrap this all up, we'll round the session out with some Q&A that we'll take from the audience, as well as present some key actions for our audience as well. So with that, let's begin on the content. Now, let's start off, like I said, with the assumptions about the pandemic. Now, what you see here on your slide in unfortunately slightly tiny text are 14 base case assumptions that we have made about the pandemic. Now, these are some really, really specific assumptions that we've made about how the virus might end up evolving, what's the transmission rate going to be like, what are immunity rates like, what's the government response going to be as a result of the pandemic. Now, we have found as a research organization that it has become ever more critical to basically align as an organization to cut through some of the noise that we're hearing from different parts of the world on reinfections, on virus mutations, on potential lockdown measures that the different governments might end up taking. So it does help to basically align internally as an organization, because as you can see here more towards the right-hand side of the chart, and as you will really see as a common thread or a theme across this entire webinar today, that really some of these assumptions, a change in any of these assumptions basically changes to a very drastic extent economic forecast for the market from our end as analysts. And of course, that then feeds into the way that you as an organization would be taking in those forecasts to inform some of your targets and sales as well as demand planning. So with that, I will highlight just about four, maybe on the previous slide, just about four baseline assumptions that you would want to take into account and not just go through the entire list of 14. So the first one is that new variants of the virus are not going to be more lethal than the variants that we started off this pandemic with. The second one is that vaccinated people cannot transmit the virus at the same rate as those who are unvaccinated. The third one is that immunity from infection or vaccinations lasts for a period of about 8 to 12 months. And finally, any kind of external border or travel restrictions will remain on longer than certain internal or domestic restrictions will. As you can see, then moving on to the right-hand side of this chart, that basically if there is a change in the way that we have assumed some of these in our base case, if there is any kind of change, either to the upside or the downside, that will then impact the direction of the economic forecasts that we will go through in several parts of this presentation today. But before we move into what our forecasts talk about, let's just talk about what some of our rough estimated timelines to reach herd immunity are. Now, just for the benefit of the audience, as an organization, we have basically assumed that a herd immunity threshold is 80% of a country's population having reached herd immunity. Now, why is this important? This is important because basically because we want to assess at what period of time over the next couple of years will a certain market go back to that pre-pandemic level of overall economic activity, consumer behavior, business investment, etc. Now, as you can see here, the three countries that we will be talking about today, which is Australia, South Korea, and Japan, have slightly different timelines when they are expected to reach that herd immunity level. And as a result of that, expected to reach that pre-pandemic level of total economic activity. For Australia, we're expecting that to happen in Q1 of next year, South Korea a quarter after that, and then finally Japan in Q3 of 2022. Now, Boyang, having laid out some of these timelines, could you talk a little bit about what this means from an economic forecast perspective for the region?
Sure, thank you, Kinnari. Good morning, everybody, and thank you for joining us. As Kinnari mentioned, all these three markets we're covering today have different pace of inoculation, and that will, to a certain extent, affect their rates of recovery. According to our current estimate, we do believe that Australia is going to lead its pace of recovery, and it's going to lead growth in terms of for Japan. And it's going to recover faster than Japan and Korea. As you can see on this chart, Japan and South Korea, to a different extent, experienced another contraction during Q1 because of the resurgence of COVID-19 during the winter months. And so that's continued to play a role in shaping the shape of recovery for these markets. And Australia is pretty much already back to COVID-19 level as of the previous quarter. So let's just continue and zooming on Japan before we turn things over to Kinnari. Now, first, we want to spend just one slide on to talk about Japan's pace of inoculation. So as countries strive to get out of this pandemic, the pace of inoculation will affect the recovery speed for different markets. And as you can see in this chart, most APAC countries have been very slow, have been relatively slow in terms of vaccinating its population. Particularly, though, if you look at Japan, it's probably experiencing the slowest vaccine rollout among the three markets we're talking about today. So as of today, Japan has only roughly estimated about 2 to 3% of its population. It's really behind its timeline for herd immunity. So we think there are significant downside risks for Japan to reach herd immunity by the timeline that we previously came up with. This is mainly because Japan is facing certain constraints in wrapping up its speed of inoculation in terms of, particularly as the government is facing shortage of syringes, as well as other logistics problems. Having said that, the Japanese economy entered 2021 on pretty weak footing. That's mainly because the coronavirus pandemic last year pushed Japan into its deepest recession since the Second World War, when the economy contracted by over 5%. For the current year, we recently just revised down our forecast for Japan. Now we only believe Japan is going to recover at 2.3% in terms of GDP. This has to do with the previous wave of winter resurgence of COVID-19. It also has to do with the fact that Japan is right now experiencing a fourth wave of COVID-19. So all of these dynamics will continue to delay Japan's recovery. If you look at the different drivers for economic growth this year, we do believe that consumer spending is where you are likely to see the biggest downside. This is mainly because the pandemic has a huge impact on consumer confidence as well as consumer behavior. On the other hand, we do believe that export demand will recover, will continue to recover, and will support industrial recovery in Japan. And that in turn will support investment. Finally, we also think that the Japanese government will continue to be supportive in terms of its fiscal policy to support Japan's economic recovery this year. Now, as I've mentioned, Japan's volatile COVID-19 situation will continue to shape its recovery, and that's going to delay Japan's demand restoration for the rest of this year. In about mid to late March, the entire Japan exited what we call the state of emergency, and as the government loosened restrictions for restaurant operations and business operations. But as soon, only about 2 to 3 weeks after exiting the national state of emergency, we're experiencing another wave of COVID-19 resurgence. And so this does not really play well into the country's recovery now that we believe regional governments in Japan, particularly in major metropolitan centers such as Tokyo and Osaka, are going to impose another round of state of emergency. So that is not good for B2C companies, as you're going to see deteriorating consumer demand over the coming weeks. Fortunately, the Japanese government, amid the pandemic last year, rolled out 3 stimulus packages, and they consist for about 44% of Japan's GDP. Now, the first package focused on supporting consumers. The second package focused on supporting Japanese companies. And the third one, which was enacted early this year, focused more on structural reforms and longer-term reforms. So you will not see an immediate lift in terms of immediate effect in terms of lifting Japan's domestic demand from the third package. Now, policymakers in Japan are considering the potential for a fourth stimulus package, which could support, consumers, but it's not certain yet, and there's still a lot of discussions internally. And given all these different dynamics, both internal and external, we do believe Japan's economy will recover this year, but at a very weak pace. And you're likely to see pretty significant divergence among different sectors in Japan, given their different exposure to weaknesses exposed by the pandemic. Now, fortunately, some good news for Japan is that externally, overall recovery in manufacturing demand in Japan's major trade partners will continue to support a recovery in Japan's export-oriented sectors this year. Over the last few months, as you can see, PMI indicator, which is Purchasing Manager Index for all of these countries, have been improving, and they're back to expansionary territory. This indicates an overall recovery in manufacturing activities, and that has lifted Japan's manufacturing activity also back into expansionary territory. And that obviously has had an impact on Japan's industrial production, which continued to recover over the course of last year. Nonetheless, you're still seeing different trends and divergence because of the different type of demand for different type of industrial products. Obviously, some of these products have benefited from the Zoom boom, so you're seeing pretty robust growth for integrated circuit and some, as well as electronic parts and devices. So while these trends will continue to play a part in supporting Japan's recovery, you're likely to see some weaknesses from Japan's consumer confidence or consumption landscape. So looking at this chart, you can see that Japan's consumer confidence has been recovering since the country ended its previous round of national state of emergency. However, we do believe that as we expect another round of resurgence of COVID-19 cases in Japan, local governments are likely to impose more restrictions. So we think this recovery is likely to be temporary. What's more likely is that we're going to see another dip in consumer confidence in Japan over the coming weeks. That will obviously continue to affect Japan's consumption and put more downward pressure on retail sales, as well as overall consumer sentiment. Having mentioned that, as you can see in this chart, Japan's retail sales is still in negative territory. And then if you look at the differences between food and beverage sales and restaurant and cafe sales, what shows you is that consumers in Japan are not going out as much during the course of the pandemic, and that will continue to play a part in its domestic consumption. On the other hand, Japan's unemployment rates as well as labor market are not really helping to, let's say, support its recovery. Although Japan's unemployment rate looks relatively low, right now at 2.9% compared to Japan's counterparts in the West or across major emerging markets, we think that Japan's unemployment rate underplays factors such as furloughs, which is really not taken into account. So what's actually happening in Japan is that wage growth as well as earnings have been contracting over the majority of last year and well into this year. And we think this will continue to put downward pressure on consumer spending and dampen consumer confidence going forward. And now this data does not even take into account the fact that we're going to experience another round of potential containment measures from Japanese local governments, which will continue to weigh on small businesses and restaurants in Japan. All right, so we will. I will stop here and turn things over to Henry to talk about Australia.
Yeah, sounds good. Thanks, Boyan. Just on the next page, what we'll see is that the most important factor here that's driving Australia's economic outlook is, well, pretty positive economic outlook is how well the country has been able to manage a lot of its domestic outbreaks. So the first part of this chart that I'll talk about is there in green, which shows the number of new cases per day. And what we've really seen is that a lot of that has basically petered out to single digit numbers over the last 6 months. Now, the main reason behind that is, the main factor behind that is the government's extremely aggressive lockdown measures that you can actually see here in this stringency index, which is in that dark blue line there. So Oxford University has come out with a stringency index that basically takes into account lockdown measures or restrictions on a host of different types of establishments, including restaurants, cafes, bars, workplaces, schools, etc. Now, what you can really see here is that the highest stringency numbers there are around the level of 80 to 85. And basically, those are when the government clamped down really, really hard, first on the entire country, and then basically the different state governments started to make their own decisions around the lockdowns. Unfortunately, the state of Victoria is the one that has seen the brunt of a lot of these lockdowns, particularly the city of Melbourne, which did see actually its third lockdown most recently in February, although its second lockdown did last for a period of 112 days back in August of 2020. You do see some of these additional spikes here as well that are related to some of the snap lockdowns that some of the different state governments have taken the decision to implement. Most recently, we saw that in the city of Brisbane for the Easter holidays. Moving forward, we do expect with a high degree of likelihood that there are going to be no more than short targeted lockdowns. So what this really means is that companies that are engaged in any kind of in-person consumption are basically likely to see some of that upside benefit here as a result of some of these short targeted lockdowns, but no more than that. And unfortunately, of course, some of that in-person consumption were the ones that were impacted more than others as a result of the Australian government's aggressive stance towards lockdowns. Now here, although what you can see is that there is a flip side to Australia's very successful management of the pandemic, which is basically its vaccine rollout, which has actually unfortunately seen some hiccups in recent days. Now, even before the vaccine rollout started, the government did fairly well in the amount of vaccine doses that it either confirmed or it had potential purchases from a host of different vaccine suppliers. And of course, as you can see here, you have South Korea, Japan, Hong Kong, Taiwan on this chart as well. And Australia has actually done much better than all of those other countries that were able to procure at least enough doses to cover their entire population, if not more. However, where the government has probably missed out here is basically its delay in the overall rollout. Now, this has unfortunately been a common trend among countries that really don't have this large manufacturing base of vaccines, have basically controlled the pandemic relatively well. And so there aren't that many restrictions that individuals or even businesses need to be that concerned about. Now, at the start of the year, the government had a goal of inoculating or giving out about 4 million doses. Very soon after, the government did push back some of this goal, so it revised its goal to about 4 million doses by the end of April. However, just as of yesterday, only about 1.5 million doses have been administered, which translates to about 6% of the total population. Now, this number, of course, falls way short of the government's early target, definitely, that you can see there in the green line, but certainly much, much short of the government's revised goal as well. Now, we are closely tracking, closely watching the rollout of this vaccination because, of course, the government's pace of inoculation of its population is going to directly have an impact on when Australia is expected to reach herd immunity. As I mentioned some time back, our estimate right now is for Q1 of 2022. But of course, some of this is likely to get pushed back if the pace of inoculation isn't really picked up by all that much. Of course, for those kind of wondering, what led to some of this gap here, Basically, it was a bunch of different reasons. The first thing, as we've seen across the board in various different countries, really, is initial public hesitancy from getting the vaccine. Again, like I said, a lot of Australians just didn't find that much of a need to go out there and get themselves vaccinated sooner rather than later. And then soon after that, of course, the EU did put certain restrictions and bans on vaccine exports. The government was kind of dependent on the AstraZeneca vaccines. About 3.1 million vaccine doses were banned from exports from the EU, and so as a result of that, some of these goals of, or the goalposts for total vaccination from the government has actually been pushed back. Most recently, what we did see was that Scott Morrison came out and basically said that they don't anymore want to place any kind of target to reach that herd immunity level. Of course, earlier they had said that the end of 2021 is what they were targeting. There isn't a government target anymore, which is kind of a signal to us that we might end up seeing kind of a prolonged rollout here. And of course, the first and foremost thing that is likely to benefit to impact is the movement of people across borders, particularly as we look to governments, airlines wanting to see some kind of evidence of individuals getting vaccinated before they can get on a plane, before they can travel to someplace outside a country's borders. Now, moving on, we basically used a lot of the pandemic or the behavior of the pandemic in Australia, as well as the vaccine rollout, in order to inform some of our forecasts. Now, what you can see on this chart here is actually a deeper dive version of what we saw earlier, the chart that Boyan presented, which was recovery timelines across the different countries in the Asia-Pacific region. Now, before we get into the chart itself, I'll just share that some of our annual forecasts for GDP, for some of the key components of GDP, such as consumer spending, investment, government spending, are all on that chart there below. Some important things to note here. The first one is, of course, consumer spending and investment took the steepest hit in 2020. But of course, government spending was that category that did come in and basically support some of this economic recovery, help to prevent a very significant downside that we've basically seen in Asia-Pacific countries pretty much across the board. GDP, as a result, contracted. Yes, it was the first contraction in over 30 years for the Australian economy, but just to put things in perspective, this level of contraction was still quite subdued. And then, of course, as you can see, in 2021, pretty much across the board, you have positive rates of growth. So then just talking about this chart that we see right here, basically, when we're talking about 2020 and 2021, referring to growth rates makes slightly little sense, or it doesn't provide the entire picture just because of the aspect of base effects. So if consumer spending, for example, contracted by about 6% in 2020, if it grew by about 6.4%, that really the overall impact on consumer spending becomes dampened as a result of the very steep contraction that we saw back in 2020. So very steep contraction is certainly going to result in a very sharp expansion, regardless of how that particular segment of GDP has really done. So in order to correct for a lot of this, what we did was we took our quarter-on-quarter seasonally adjusted growth rates and basically indexed them to a value of 100 back in Q4 of 2019, which we assume to be a pre-pandemic normal. We then charted that out across GDP, across the different components, to basically estimate at what point will the Australian economy, as well as the different components of the Australian economy, go back to a pre-pandemic level, and even in this case, kind of rise far above that pre-pandemic level. Some of the key things to note here is actually that back in Q3 of 2020, the Australian economy did kind of scrape that 100 line there. It did kind of go back to a slight pre-pandemic level before dropping back down. Of course, we are expecting that when the Q1 numbers come out next month, we do expect that the Australian economy would have gone back to that pre-pandemic level in Q1, but unfortunately those numbers remain to be seen for now. Some of the other key things to note here is that consumer spending and investment will also go back to that pre-pandemic level. Consumer spending did see the steepest contraction here, again, as I mentioned, mostly as a result of the extreme lockdowns that the government did implement pretty much through 2020. So now let's take a deep dive into what some of these numbers look like across the different sectors. Now, what this chart here shows us, it basically, we've picked out the very key sectors for the Australian economy, and we wanted to basically track how these different sectors did in 2019 before the pandemic struck, and then how they did in 2020 after the pandemic struck. So there are certainly some sectors that have been resilient in the face of this COVID-19 pandemic as well. So really the way to read this chart here would be the further right that you go, basically the right-hand side of that vertical line there, those are the sectors that did well in normal times, in pre-pandemic times. So a lot of those sectors are the financial services sector, education, mining, healthcare, as well as transport and warehousing. But then in order to assess the way that things have gone after the pandemic struck, so the higher up in this chart that you go, those are the sectors that have been resilient despite the pandemic in Australia. And some of those are really these services-oriented sectors. So that's financial services, education, health, and kind of mining as well, continue to remain kind of resilient. Of course, agriculture did probably the best in Australia in 2020. But what we are really seeing is that the steepest contractions that we're seeing here as a result of the pandemic was the transport and warehousing sector for sure, the construction sector as well, and aside from that, the manufacturing sector as well. So, you know, some of this kind of analysis also tends to be quite useful for companies that, you know, the companies that have joined us on the line today that do serve a variety of different sectors. And so using this chart, you can certainly identify basically the ones that are on the top right-hand side. Those are the sectors that are some of the more resilient sectors. And of course, those are the ones that will continue to do quite well, at least in the first half of 2021. Now, moving on from some of these different sectors to really switching over to the consumer side of things for our B2C clients on the line. Now, as we moved towards the end of the year, compared to 2019, the first set of positive news is that a lot of different sectors did move into this positive territory. Now, during the depths of the pandemic, we did see that across that spending across food, alcohol, and tobacco sectors actually remained quite resilient to varying degrees. You did see that the food consumption did remain quite strong. Aside from that, furnishings and household equipment as well did quite well, even in the depths of the pandemic. Now, spending, as you can see here, on vehicles, in fact, did spike quite sharply. So that's the very strange orange line that's going up there towards the end of 2020. The spending of vehicles basically rose by quite a bit towards the end of last year, mostly as a result of some of the shift in household spending away from travel that a lot of Australians do tend to spend a lot on. So the spending kind of moved away from that into vehicle purchases. You also had this element of wanting to, you know, this public safety element. So wanting to switch away from using some of the public transport methods to spending on private vehicle use. And so as a result of the confluence of some of those factors, you did see that extreme spike up in spending on vehicles. However, the two lines that do come across quite strikingly here is spending on in-person consumption, which is spending on hotels, cafes, and restaurants, as well as on accommodation services, which is basically a result of the impact on the tourism sector. Those are the ones that saw the steepest hit in Q2 of 2020, that continue to remain in steep contractionary territory even in Q4 of 2020. However, I do want to highlight here that those are also the sectors that we do see that we do expect have the highest upside potential here. So again, as I have spoken about in the last few minutes as well, that basically as a result of a fairly successful COVID or pandemic containment situation in Australia, companies are likely to see that some of the spending on domestic tourism, so as a result of that, accommodation services, some of the spending on in-person consumption, those are the ones that are likely to see the highest upside potential. So that's certainly something to look out for. Now, speaking of spending on accommodation services and tourism, let's actually look at some of the deep dive into the spending on tourism trends, a sector that is actually quite important, of course, for a lot of B2C companies that we serve, but certainly also the Australian economy as a whole. The sector does contribute to about 60 billion Australian dollars per year. Now, I'll just touch on very briefly the right-hand side of the slide first. Basically, the pandemic has, without a doubt, put this rather prolonged halt on overall international tourism levels. So really, no surprises here. International travelers have been at an all-time low compared to the early parts of 2019. One thing certainly that is kind of a good news here, or on the optimistic side of things, as of just yesterday, the Trans-Tasman travel bubble opened up for between Australia and New Zealand, and certainly some of us here based out of Singapore are expecting some good news shortly on the Australian-Singapore travel bubble as well. But certainly what we are likely to see is that a lot of the international travel, well, some part of the international travel from New Zealand into Australia is likely to see some of that uptick there starting April, so basically starting this month. But it's not all doom and gloom. As a result of the halt in international travel or international tourism into Australia, you did see that Australians had actually mostly started to replace a lot of this international travel with an uptick in domestic tourism. So you can quite well see that, well, both the lines and the bars going up there gradually towards the end of 2021 as consumers probably started to realize that things are going to be shut, borders are going to be closed for quite a prolonged period of time. And so as a result of that, spending on domestic tourism, as well as the overall numbers of domestic travelers, and this is total total domestic travelers within the Australia's borders, have pretty much remained quite strong and have been increasing towards the start of 2021. So really some of those companies on the line that serve the tourism sector, that are aligned with the tourism sector, you should seriously start to consider pretty much through 2021 to really align some of your marketing efforts, some of your sales efforts oriented towards domestic travelers, and really expect the bounce back in international tourism to take quite long, because again, as we have seen, the vaccine rollout, which has seen quite a few delays in recent days, is the one that is going to prolong some of the recovery in overall international tourism as well. Now, having covered the various industry segments as well as consumer trends, I do want to conclude the Australia section by talking about government spending and priorities, which are going to be quite useful for certainly a lot of our B2B companies on the line, but also the companies that serve the public sector. So the first point to note here is that the Australian government has actually been among the highest spenders of overall fiscal spending packages across the entire region. So as a result of that, in that financial year 2020-21, that's when you see that spike in overall government spending, and a lot of that did come out from the 272 billion Australian dollar fiscal package that the Australian government came out with. The main factor or the main area of spending, of course, there was a lot of the spending on overall welfare expenditure as well. But the really key one that that I believe certainly did help to boost up some of that economic recovery, help to dampen some of the downside impact of the pandemic, was the job keeper wage subsidy that the government introduced, which basically subsidizes the wages and so helps to bring down some of that business cost, helps to push up some of the wages income, and then as a result of that, consumer spending on the consumer side as well. Some of that, of course, has ended now because they basically introduced it at the height of the pandemic, and so they have started to wean some of that off. And that basically ended this month. So as of April 1st, that wage subsidy has been pulled. But then you also have some of these medium-term trends as well that the government is actively thinking about. And so any companies on the line that do serve the public sector, aligning with some of these priorities, these medium-term priorities of the government, is going to be quite useful just in order to gain some of that incentive in monetary terms that the government has been putting out, as well as just orienting yourself towards where we're expecting the economy to go is going to be quite beneficial. So some of this that the government is starting to do is, of course, the job maker hiring credit. So it does want to provide over the next 5 to 6 years a $74 billion package on basically enhancing hiring. It has also, moving into 2021, 2022, also wanted to increase some of its infrastructure spending on some certain kinds of digital connectivity, digital health initiatives, as well as, of course, clean energy initiatives as well. A kind of certain different packages that the government has come out with. So the first one is, of course, this modern manufacturing strategy in order to support businesses that do align themselves across a variety of different sectors. So some of these sectors are manufacturing of minerals, so minerals processing, food and beverage production, medical products, clean energy, defense services, as well as the space sectors. So any of our B2B or even public sector companies or B2G companies on the line should really expect that some of this concerted effort from the government side towards some of these specific sectors that I just mentioned are likely to benefit and enhance manufacturing in some of these sectors over a period of the next 5 years or so. So with that, we conclude the section on Australia. I'll move things over to you, Boyan.
Thank you, Kittery. Now, as much of the world is going through what we call Japanification, marked by high debt levels, low growth, projected recovery, as well as low consumption, deflation, Korea is one market where a lot of our clients find optimism and potential growth this year. We think Korea's growth is mainly marked by the strength of Korean consumers, as well as very supportive government actions, including fiscal support, as well as plans to increase public investments. Now, last year, Korea actually experienced the smallest contraction, economic contraction among all OECD countries, as the economy only contracted by 1%. Now, this year, we do expect relatively strong recovery out of Korea, despite the fact that it's comparing with a relatively higher base from last year compared to other markets. So this year we expect the economy to grow by 2.9%, which allows Korea to reach its potential growth. Now, we think this is also supported by a relatively stable COVID-19 situation, although we do think Korea's pace of vaccine rollout could be faster, but at least for now, we think we expect gradual consumption recovery over the course of this year. Now, if you look at the trajectory of Korea's growth, we do expect the economy to move back into expansionary territory in the current quarter. This is both for year-on-year growth as well as if you look at the comparison between comparison with its GDP level at Q4 2019. And we think this is mainly because Korean consumers have recovered their confidence in terms of spending, as well as I think the economy has benefited from what we call the Zoom boom, particularly noted by a very strong export-oriented sector. Now, having said that, South Korea, similar to Japan, is experiencing a potential fourth wave of COVID-19 resurgence. Nonetheless, we do want to note the difference here, that if you look at the daily number of cases in South Korea, recently over the past 2 to 3 weeks, it's usually around 400 to 500 on average. And so if you look at the scale with the COVID-19 situation in Japan at the moment, which is really, we're talking about over 5,000 cases nationwide. And given that South Korea's population is only about half of Japan's, so the scale of its COVID-19 outbreak is really much more under control compared to its neighbor. And we think what this allows is that the government, allows the government not to impose more strict lockdowns or containment measures, which will allow a faster recovery in terms of economic activities over the coming weeks. Now, similar to many governments around the world, the South Korean government is very much focused on improving its competitiveness, particularly, in the COVID-19 world, or potentially sometime in the future in the post-pandemic world. So last year, the Korean government announced a new deal, and if you look at the two components of the new deal, it's much focused on increasing South Korea's digitalization, as well as embarking on a path toward reducing its carbon intensity in the economy. What this means is that the government wants to increase investment in those two areas, including improving the country's digital infrastructure, foster the so-called untapped industry. This obviously because given the revelations of COVID-19, as the economy continues to deal with the pandemic, it's important to build this sort of resilience that is built upon digitalization, as well as reducing the need for face-to-face contact. Now, for the Green New Deal, South Korea, similar to other governments in the region, announced a plan to allow the country to reach carbon neutrality by 2050. That's obviously is a somewhat ambitious plan, but what this entails is that the government is going to significantly increase its investment in green infrastructure as well as green energy. So you're likely to see, for B2B companies particularly, going to see a lot of upside in terms of public investments as well as private investments as companies bid for government projects. Now, moving forward, given all these internal and external dimensions, we do think that Korea's recovery for different industries and sectors will look like this. And so you're likely to find pretty good resilience in sectors such as construction for the rest of this year. And in terms of consumers, we're also expecting a relatively stronger recovery compared to Japan. This is also because Korea's digital infrastructure and growing e-commerce industry has helped Korean consumers to maintain their purchases despite the impact of the pandemic. Now, Korea's economy has been normalizing since the second half of last year. As you can see, most of its economic indicators, such as industrial production and retail sales, have, for the most part, remained in expansionary territory. And we think this is a pretty strong demonstration and indicator of the strength of the Korean economy, despite the impact of the pandemic. We think internally, it's supported by a very strong and robust recovery in consumer spending. Externally, global demand for electronics as well as other semiconductors have helped to support Korea's exports, and that in turn has supported Korea's industrial production, which is shown in these two charts. As you can see, for one thing, Korea's exports have moved back to expansion territory since Q3, Q4 of last year. And for now, it actually is growing exponentially at over 10% year on year. This is despite the impact of all these disruptions created by the pandemic. And if you look at Korea's Purchasing Managers Index, it actually has expanded by the most in at least a decade in recent months. This is obviously, as I mentioned, supported by still very heightened global demand for electronic products, so-called the Zoom boom, as people continue to work from home, and there's increased demand for indoor entertainment. And Korea is obviously a heavyweight in terms of electronics manufacturing. Looking at the consumer side in South Korea, South Korea's consumer confidence has shown particular resilience over the past few months and has steadily increased over recent months, and now it has moved back to expansionary territory for the first time in more than a year. And that is a remarkable achievement for Korean consumers. We think, for one thing, Korean consumers showing more confidence in terms of the economic outlook for their country. Secondly, they're more confident about their own salary growth and wage increases, all of which will support more consumer spending for the rest of this year. And needless to mention, South Korea's unemployment rate has fallen to pretty much pre-COVID levels at the beginning of this year. If you look at the hike during the end of last year during Korea's third wave of COVID-19 outbreak, and it has come down pretty dramatically since its peak. We think a lot of it has to do with the fact that the Korean government has been very supportive, providing necessary subsidies and loans for struggling small and medium enterprises. And we also think that the strength in Korea's industrial sector has supported employment in that sector. Now, finally, looking at Korea's shifting consumer behaviors. Now, as you can see, over the course of last year and even before last year, Korea's online sales have been expanding and growing at a much faster rate than its overall retail sales. So I think the pandemic, if it's done anything, has really accelerated the shift toward e-commerce and online shopping. And I think this has been also underpinned by Korea's world-class digital infrastructure, as well as fast and wide Wi-Fi connection, as well as a developed telecommunication network. And it's also marked by recent IPO of Korea's biggest e-commerce giant, Coupon, in the US. And so South Korea right now has the world's 5th largest e-commerce market, and it has the potential over the next year or two to become the world's 3rd largest market for e-commerce, only behind China and the United States. And so companies on the line, it's particularly B2C companies, there are very good reasons for you to continue prioritizing online channels as consumers remain very cautious and shift towards e-commerce and online shopping. All right, so that brings us to the end of our market sections and moving on to Q&A.
Outstanding insights. Thank you, Boyoung and Kinnari. We would now like to begin the Q&A portion of the webinar. If you have any questions, please share them with us via the Q&A box of the GoToWebinar application on the right-hand side of your screen and by typing them to FrontierView webinar. We do see some questions coming in already, so perhaps we can start with a question on Australia. I have one here for you, Kinnari. There's been a lot of problems lately for AstraZeneca's vaccine. How do you see this impacting Australia's vaccine rollout?
Yeah, absolutely. So, so that's a good question, and certainly something that we did touch upon just now. But basically, yes, questions are being, there are concerns that are coming out about the AstraZeneca vaccine, mostly from the EU, and now more recently from Australia as well. Of course, so basically the link here is a very, very, very rare kind of a blood clot that is associated with the administering of the AstraZeneca vaccine. Of course, as a result of that, you can see the highest impact being on public fear or hesitancy from taking the vaccine. But certainly from the government side, also because AstraZeneca comprises a pretty large, more than about 1/3 of the total number of doses that the government is expected to give out. As a result of that, we are certainly expecting that since the government has allowed the AstraZeneca vaccine to be given to people that are above the age of 50, we'll certainly see some of the public hesitancy probably slowly ebb, hopefully. And so as a result of that, that will likely help to assist the faster rollout of the vaccine. But certainly you will likely see some other dynamics play out. So for example, the government recently also ordered double the doses of the Pfizer vaccine than it did at the start of the year. So the government is trying to kind of pull at these different strings, and all of this is certainly an effort to come as close as possible to their original vaccine timelines. Again, as I have mentioned, all of this is a concerted effort to basically get back to that pre-pandemic normal, certainly as it relates to the movement of people across the different state borders, but also Australia's international borders.
Thanks, Kinnari. Very insightful comments for Australia. It looks like we also have quite a bit of interest, especially for Japan with the Olympics. So here's one for you, Boyang. How likely is Japan still able to host the Olympics? And what would be the impact for the Japanese economy?
Oh, thanks, Althea. Thanks for that question. The Tokyo Olympic is definitely top of mind for many people, and not least for the Japanese government. Right now, the government of Japan is still planning to host it, although they have decided that they will not allow any inflow of international tourists, and this is exactly our base case scenario we came up with last year in terms of expectation for the Tokyo Olympics. And now recently, because of the resurgence of COVID-19 cases, there are voices and discussions in Japan to cancel the Olympics just, completely. So I think at this stage, the potential for hosting the Olympics is really low, given the situation Japan is in. And actually, there is very strong public support for canceling the Olympics, and very strong public opposition for having it. So I think it really depends on the rollout of vaccines, which remains very, very slow in Japan. Just from if Japan continues vaccine rollout at its current pace, it will take Japan years to vaccinate its population. So there are all kinds of challenges and risks that will make hosting the Olympics very difficult this year. However, the impact on the economy will not be so substantial, given that we don't expect inflow of international tourism, and we also think that domestic tourists or spectators will be very limited with strong social distancing measures. So as long as Japan continues to experience this volatile situation of COVID-19 and local governments continue to impose some kind of curfew or limits for business operations, we don't expect a strong recovery in consumer confidence, as well as stronger consumption just because of the Tokyo Olympics. Yep.
Thank you, Boyang. All right, it looks like we're at the time limit for today's webinar. If there were any questions that we were unable to answer on the line today, we will be sure to follow up with responses through your client relationship manager. Before we conclude, Boyang and Kinnari, do you have any final remarks to share with the audience?
Yeah, thanks, Althea. So we do have this segregated by country, but I guess just to begin with, across the board, we did want to point out that it is certainly important to align internally within your organization on the set of assumptions that you will use in order to make your forecasts about the COVID-19 pandemic as well as economic recovery. And of course, at the start of the conversation today, we did highlight some of our own assumptions, and so you can consider using some of those assumptions to inform your own internal discussion.
Thank you for rounding up.
Yeah.
Go ahead, Boyang.
Thanks. So for Japan, obviously, as I briefly touched upon in today's webinar, We do expect continued disruptions because of Japan's slow vaccine rollout and a volatile COVID-19 situation. So firms across different sectors should prioritize more resilient sectors and channels in Japan in an environment of growth, divergence, and shifting consumer preferences.
And then for Australia, just off the bat, you should expect a robust economic recovery in 2021. For our B2C firms on the line, you should look out for and capitalize on the expected increase in demand for in-person consumption as restrictions basically loosen up much more in 2021 than they were in 2020. And for the B2B firms on the line, you should target the building and machinery sectors, as well as all of the different digital infrastructure development projects that the government has come up with.
Finally, on South Korea. South Korea is one market most MNCs are likely to find optimism and growth in 2021 because the economy continues to benefit from a Zoom boom due to global demand for electronics products. However, you still will find a K-shaped recovery in Korea, particularly in the consumer space because of shifting consumer behavior toward online channels, while offline services channel will continue to lag this year.
Great, thanks Boyoung and Kinnari for rounding out the session. We would also like to extend our thanks to our listeners as well. We have covered a lot of ground in a short time. I encourage all of our listeners to read our analysis and schedule individual briefings with our analyst teams on today's topic, given their importance. As a reminder, FrontierView clients can speak to Boyoung, Kinnari, or any member of our FrontierView APAC research team at any time by scheduling a briefing through your client relationship manager. Additionally, all of FrontierView's research, award-winning Frontier data, and analyst insights are available and always updated on FrontierView desktop and mobile applications. This concludes today's webcast. We look forward to speaking with you again soon. Thank you.